Alright guys, this is very important. This is AWK Water Company. This is a 20-day 1 hour chart. That's why history is very important. You gotta remember that history is very important. And not only history, but just patterns itself, because it usually repeats. And I've seen this pattern so many times. As you can see right here, it did a almost an $8 movement from 111 all the way to 119. That's almost an $11 move within the 2 days. Within 2 days, is that reasonable? No, it's not. It's not reasonable. 2 or 3 days, started here. So that's 1 2 3 days. Is that reasonable? Probably it is reasonable. It got probably a catalyst or some type of good news. So this is the reason why it probably pumped the way up all the way over there. Now, people who entered here on the good news, or anticipation of the good news, starting to sell off over here. This probably happened in anticipation of the good news. So once they got their good news, the stock started to go down. This is my prediction. I haven't looked into what really happened, but it seems to over 3 days, it seems to go very very high. But I want to point out this right here, the consolidation between this. Yeah, you do see drop it right here. This is the line I just placed right now. As you can see, it did drop above that line, but for the most of the time, all this days, would consider consolidation. Now, of course, you can make this is a $2 movement. That's for a lot of people. It's a quick, easy money, and I understand that. But for me, it's quite risky, especially if I can day trade. If I had $25,000, I'll day trade it as well. Easy money right here, but it's very dangerous because you really don't know what the stock might do. But this is the area of consolidation. Now, you can. This is danger zone for me. Now, you can argue that all this is support, and you can argue that this is resistance, because the stock is unable to go beyond this point, and the stock is not able to go below this point. Well, it does. It does at the beginning. For the most part, sorry about that. You guys understand that it's just in between. Now, chances are, guys, very high chances are that after a run like this of an $8 move, the price is trying to adapt to that new price, and it did for quite a while. It looks like it's over 10 days or something like that. 20 days obviously over here, so it's over like 2 weeks that's been trying to adapt to that new price. But however, you do see resistance 2, 3, 4, and right here is when the bears hit it hard. Boom. But here's the thing. Right here, you see this consolidation? Boom. It did not go below this one. Now, I could also move this one all the way over here. That way, it goes all boom. Go from that to that, from that to that. But most of the time, the consolidation happened over here. This is why I highlighted this area. Not highlighted, but I got this area instead. But as soon as it dropped here to the, what is it? What price is it? There's a price of 113. Like, had dropped over here, it started ricocheting to the top again. So guys, this is the stuff you gotta look at. Major resistance, major support, was right down here. This was just trying to move around, trying to decide. When it decided, the bears won the fight. It's a bearish move. Bear means you're expecting, or they are expecting the stock to drop. So whenever a candle is red, that's is considered um bearish, bear, like a bear, yeah, like a bear. That's why it's bulls versus bears, in case you didn't know. So the candle red represents a bullish move. The candle green represents a bull move, meaning it's gonna go up. So bearish down, bullish up. So in case you didn't know that. So anyways, so major resistance you can see right here. From here it went up, right? So from here we're expecting to move up, and sure enough, boom. Now I'm not saying that the stock had to do this. You know, the stock could have ricocheted from here to the top and continue to new higher highs, but it didn't happen, you know. And this is not gambling, guys. A lot of people think it's gambling. It's not, you know. It's it's probability, you know. Gambling, you can go gamble in Las Vegas. You know, we don't gamble. We are smart people. We are educated people who look for statistics, you know, and we based it on moving averages, on SMA, EMA, which you know, it it really just comes down to what strategy you want to use. We use the RSI, relative strength index. We use a lot of stuff. Different traders have different ways to trade. You know, this is not the only way to trade. There's a lot of ways to trade, and it's important for you guys to know that this is not gambling. You know, yeah, we do lose money, and yes, we make money. You know, now it's up really to you. What is your probability? The ratio of your probability, 1 to 2, 2 to 3, or 1 to 3. You know, what is that? What do you feel comfortable trading with? You know, do you feel comfortable trading if you have a 30% chance? You know, like right here, this is, you're not gambling. You know that you can lose 50% chance of the stock dropping or the stock going up. Why? Because it's in consolidation. But technically, if you really look into the fundamentals and statistics, it already moved. It already did there. It's $8 move. So why would you buy over here? Why would you buy? You're waiting for a drop, a harder drop than just $2 like this right here. Boom. Then you buy here because you have the support. Well, this is a support, but it broke. Now the real support is right over here when it dropped prior in last week's prior to this. So from here, and you can see right here how the stock starting go up. Why? Because investors know, institutionals know that this is it's oversold, meaning now is the time to buy. And the RSI tells us right here it's oversold. You see how the the RSI over here is red? That means the stock is about to drop. Boom. Why? Because it's overbought. Over here it's oversold. So that's why it's blue, meaning the stock is gonna go up. And guess what? It did. So there's different things that you can use, like this one over here. Now this is something I customized. This is, you don't get none of this. You gotta do it yourself, you know, according to what you have learned throughout the journey of trading. So guys, this was a 50% chance, 50-50, and you know it. And if you lose money, don't hate yourself. You know, you took the chance. The thing with trading is that you gotta understand that there is risk in everything. There's risk. You know, when you buy a house, there's a risk because you can lose your job. You know, when you buy a house, there's risk because you can lose your job. You know, so in everything in life that you do, there's gonna be risk. So the problem is that some of us are take bigger risks than others. You know, so this is like kind of like a free fall from here, like, and it's so funny because it's a false breakout right here. And that's what makes it so challenging, because you see a big green day right prior over here, and then it's like boom, like it free falls, like oh no. But was it really? How did you know? Well, I didn't know. This could have kept going up, but I do know that the stock already ran $8. I already know that it's topping right here for a whole week or two. So why would I buy? I already know that the price is having trouble going up. So there's a sell off. Boom. Now all the buyers are selling. Boom, boom, boom. That's why supply and demand. It all comes down to supply and demand. I learned this in economics, and I was like in 10th grade, guys. 10th grade, basic knowledge. You cannot tell me you don't understand up and down movement. The stock market is very simple, but it could be very complicated if you complicate it. Now, this is the time to buy right here. Boom. Now, you gotta understand, guys, that this doesn't mean that the stock will continue to go up. This means that there is going to be a bounce out of this, maybe to the 50 moving average. This one, like I said, all this is stuff that I place here because it helps me statistics. None of this comes with this. It probably comes like this. Look, I don't know how. It just doesn't come. Like, you gotta really customize this thing and understand what you're doing. Anyways, so this is what I call a bounce back. So you buy here and sell here. Why here, Danny? Why? Well, the 50 moving average is there. So that will act like a resistance. This is based on my knowledge, based on criteria and the studies that I've made, statistics and spreadsheets and whatnot. Okay, guys? So this is a from about 1450, 1490 all the way to almost 17. Now, it bounces back and it could get rejected at the 50 moving average and keep going down. Okay? Why? Because look at that sell. Boom. However, the other option that could happen, I know for a fact that it was gonna go bounce back. Why? Because it dropped so hard, it has to have a bounce back, especially because there was support right over here. Now, do I think the market is gonna keep going up? Yeah. So I'm just saying, if my 20 moving average doesn't keep moving up, that means that there's gonna be rejection by the 50 moving average. Now, you gotta understand that my 50 moving average can act like a resistance when the line is above the candlesticks. When it's below, it acts like support. For instance, right here, my 200 moving average is acting like a support. Now, my 200 moving average will be acting like support. Why? Because it's about to break that, And my 15 moving average is going to act like a resistance. Okay? So once my 200 moving average moves above the 200 moving average and my 20 moving average moves above the 50 moving average, that is now confirmation that the stock will continue to go up. So what a lot of people will do will get this from this bounce and boom, have a big sell and keep dropping. It's not a fake breakout. It's just the way it works, because people are buying here prior to the resistance, like I said, sell off here and it starts going down. Why? Because it comes down to supply and demand, guys. Supply and demand. So yeah, that's it, guys. So hope you learned a little bit.